Dear students, now we will learn how to prepare the common size statements. Before learning how the common size statements are prepared, we must understand what we mean by the common size statements. Common size statements are those in which individual figures are converted into percentage to some common base. From this, you please understand that what we mean by the common size statements. Under common size statement, one common base is taken and all other individual figures, they are converted into percentage. For example, if we are preparing the common size balance sheet, we will take the total liability or total assets amount as equivalent to 100 and individual items, they will be converted into the percentage. Because when the total is taken as 100, then all the other components like the reserve and surplus amount is given, non-current liabilities is given, current liabilities are given, shareholder funds are given, they should be converted in terms of the percentage. Likewise, CBSE may also ask 3 or 4 marks question from this lesson also, and it is the most easiest topic of your syllabus. How the common size statements are prepared? These statements are also prepared in the same way as we had prepared to the comparative financial statements. The only difference lies that in case of the comparative financial statements, we had taken the absolute changes and then we had taken the percentage. But here, as the title of the topic itself say, that common size statements. So here we will take any base as a common and all the individual figures, they are converted into the percentage of the total. Likewise, we had prepared the comparative income statement and comparative position statement, that is comparative trading profit loss account and comparative balance sheet. We can also prepare the common size balance sheet as well as common size profit and loss account and the common size income statement. So let's learn how we will prepare the common size balance sheet. See what the column you are needed. You will see that here in case of this, the figures are already given to you for the current year and base year. For example, see, if we have to prepare the common size balance sheet of D Limited, the figures of equities and liabilities as well as asset, they will be given to you in terms of the base year and in terms of the current year. So we will take the base year as well as the current year. Again, a caution is there. You please check that the years must be given in the order that the base year and then followed by the current year. Now here the base year is given, current year is given, and how we will prepare the common size statement? See here. As usually the 2 years we will write there the amount, base year, current year, and with reference to the common size, what we have to do? Again, for 2 years we have to prepare the separate column, and then what we have to do? See here, the total amount of the equities and liability side for 2011 is given 27 lakh, and for 2012 it is given 35 lakh. Now what we will do? We will convert the individual figures of all the items with reference to the percentage, taking the total amount as 100 as base, because in terms of the percentage it is 100. See, for the 2011, 27 lakh will be assumed equal to 100. For 2012, 35 lakh will be assumed as 100. Now, how the individual percentage will be calculated? We will take a very simple base that 27 lakh is equal to 100. Now, for the individual item, say for example, with reference to the share capital, for 2011, it is 15 lakh. How we will convert it into percentage? In junior classes, you had learned a very simple method that is known as the unitary method. Here simply we can convert by that method. 27 lakh is assumed as equal to 100. 1 is equal to 100 divided by 27 lakh, and 15 lakh as the amount of share capital, that will be multiplied here. Once again, equation will be 27 lakh is equal to 100 rupee 1 is equal to 100 divided by 27 lakh, and 15 lakh is equal to 100 divided by 27 lakh into 15 lakh. That will give you a percentage of 55.56. Likewise, for reserve and surplus, 4 lakh. 4 lakh means 27 lakh is equal to 100. 1 is equal to 100 divided by 27 lakh into 4 lakh, as the amount of reserve and surplus is 4 lakh. So this way, when you calculate, you would find the percentage 14.81. Likewise, for long-term borrowings, we will say very simply 100 divided by 27 lakh into 6 lakh. The percentage comes 22.22. Likewise, for trade payables, 2 lakh. That means very simply 2 lakh divided by 27 lakh into 100. So it will give you a percentage of 7.41. This is for the equities and liabilities for the year 2011. Likewise, for the year 2012, what we will do? Same way, 35 lakh will be assumed as equal to 100. As for 2011, 27 lakh was assumed as equal to 100. For 2012, 35 lakh will be assumed equal to 100. So 35 lakh is equal to 100. Same way, now we have to find out 20 lakh is equal to what? Very same formula. 35 lakh is equal to 100. 1 is equal to 100 divided by 35 lakh, and 20 lakh is 100 divided by 35 lakh into 20 lakh. That will amount to 57.14. For reserve and surplus 3 lakh, very simply 100 divided by 35 lakh into 3 lakh, that gives you 8.57. So likewise, for all other items, that is long-term borrowings and for trade payables, we will calculate in terms of the percentage. When you add all these individual figures, you would find the total is equivalent to 100. Come to the asset side. Same way, we will take the same amount is given of the total assets and total liabilities. 27 lakh for 2011, for 35 lakh for the year 2012. Now one by one we will calculate here again. That is for tangible and intangible assets separately. Tangible assets 15 lakh, 20 lakh. When we assume 27 lakh is equivalent to 100, 15 lakh will amount to 55.56. So this way we will calculate to the individual percentage of all the items, resulting to a total of 100. So this way, very simply, we can very easily prepare the common size position statement or common size balance sheet. It is very easy to prepare. Just the total will be taken as the base equivalent to 100. I will continue in my next video relating to the preparation of common size income or common size profit and loss account.